afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, May the 19th, 2025. I gotta be careful. Every time I start one of these podcasts, I want to start out saying interesting day in the market, and then that gets so old, and I almost can't help myself. I almost stumble into saying that, and I want to try and get out of that habit. Let me tell you about what went on in the market today, just in case, just for those of you that may not have been able to watch and weren't paying attention all day. I'll tell you what went on, then I'll just give you my take on it. Dow Jones up a surprising 137.33. I'll tell you in a second why I think that's surprising. S&P eked into positive territory, just barely 0.09%, so not even 0.1%. And then the NASDAQ, same thing, just eked into positive territory. And I believe that the NASDAQ did it very, very late in the day. If we look at this one-day chart, I was not paying attention and watching, so I did not see it go slightly positive back there during the early afternoon hours, but I know it had to really have a strong move that last 15 minutes the market was open to get into positive territory to close. So earlier in the day, there was a brief time where it looks like it went positive, and I wasn't watching real close and did not see that it had gone positive, but it certainly managed to finish just barely in the positive today. Now, here's why I say it's a surprise. And again, this is just in case you weren't watching and paying attention to what was going on. Over the weekend, and I think it got reported, I want to say Saturday, maybe Friday at the end of the day when the market was closed, it got reported. Moody's downgraded the U.S. credit for the very I find two things about this very interesting, not surprising, but interesting. I find it worth noting that over the past 4 years with a different administration in office, Moody's never decided to downgrade the U.S. credit, in spite of the fact that spending was out of control, debt was out of control. It continued to go higher and higher. It continued to be a problem. It was absolutely laughable how bad things were getting over the past 4 years. But only in the early part of this year, with a new administration in place, do they decide to downgrade the U.S. credit. To say it's not political, you have to have your head buried in the sand and pretend reality is not really happening. So I find that interesting. The other thing I find interesting is how quick the American investors and Wall Street blew it off, because no one, and I mean no one, except for the people who get their paycheck from Moody's, cares at all about Moody's and what Moody's thinks about the U.S. credit rating. If Moody's was a reputable, non-political organization, they would have looked at the steps that are being taken right now to try to cut back spending, to try and reduce the deficit, to try and pay down the debt. Now, I know we haven't had success with it yet. We're waiting on a lot of things to happen. I shouldn't say that. The deficit is being reduced a little tiny bit by the things going on at Doge, but there's a lot more work that needs to be done. So there are steps being taken and there are efforts being made. But to ignore that for the first time in 4 years, 4.5 years, there are steps being taken to change the trajectory of that out of control spending and that out of control growing debt. And that's when you decide to downgrade the U.S. credit. That reeks, and I mean it absolutely unequivocally reeks of pure politics. But I love that Wall Street and U.S. investors were able to look past that and basically blow it off. And that's what happened today. Futures were down pretty dramatically. The markets, I'll just look at the Dow because it had the best day from a percentage standpoint. It started the day down, and just within that first hour of trading, it had improved dramatically. then it flattened for a couple of hours, and then it improved very steadily throughout the day. Dipped a little bit again, but then moved solidly back into positive territory before the day was over to finish up 1/3%. And so, can't help but say it was an interesting day in the market. Every day is an interesting day in the market, but I think it's pretty phenomenal that the markets were able to shrug off that news from Moody's. I believe the rest of this week, I'm going to comment about what's going on in the rest of the week, and then I'll talk about the new trade we did and a couple of things to watch for the rest of the week as far as our trades go. So there's not a lot taking place this week in the way of financial news reports, or not financial news, but financial reports coming from the government that are really likely to move the markets dramatically. You've got, they've got a little star here by if you can't read that, it's too small on your screen. It's the EIA Petroleum Status Report. I believe that will include what our strategic reserves are. I could be wrong on that. I don't know that that's really going to be a market mover. Existing home sales could have an impact on how things move when that report comes out early in trading on Thursday, if it's a really super good or a really super bad report. Jobless claims, they would have to come in ridiculously out of line with estimates for that to be a real market mover. And then maybe new home sales on Friday. But this is kind of a lackluster week. And what that means is politics will drive the market this week. You've got a few companies reporting earnings. I think Zoom reports earnings at the end of this week. There are a couple other companies that are Home Depot reports tomorrow morning. That could certainly, Home Depot kind of gives you an insight into how consumers are doing and how the home remodeling, which ties in closely to home sales and inventories and stuff like that for used homes. It can give you a little glimpse of that. So if Home Depot had a major beat or a major miss, that could be a market mover, especially for the Dow Jones, since it's a component of the Dow Jones and a fairly heavily weighted component of the Dow Jones. But it's kind of a slow week, relatively speaking. It's kind of a slow week. So I don't expect a lot of movement to come this week in the markets that is not political based. If you hear reports about new trade deals getting negotiated and finalized, if you get reports about new tariffs being imposed, if you get reports about the big, beautiful bill that the Republicans are trying to get on the same page on getting completely squashed. It had some struggles last week, over the weekend, sort of, kind of, almost got resolved. But, there's a report that President Trump is going to speak to going to Capitol Hill tomorrow to speak to Republicans there. And he's got to try and rally people and get them on the same page. I know there's some major holes in this bill as it comes to spending cuts and spending reductions, but I hope the Republicans are not stupid enough, and I fear they may be. I hope they're not stupid enough to ignore, step over, obliterate something good in the pursuit of something that is perfect. I don't think you're going to get a perfect bill. I would love to see deep cuts come to Medicaid and not have it kick in 5 more years. And that's kind of the rumor. I'm simplifying, but the rumor is the work requirement for Medicaid is not going to kick in until 2029. That some of the cuts to illegal immigrants getting Medicaid are not going to take effect for some time. I would love to see that be different. But if they can't get that worked out, they better get something worked out and get it passed and get it through to extend the Trump tax cuts from his first term. I know there's questions about SALT deductions. I'm not in a state where SALT deductions are an impact, but I understand what it's about. I understand that being able to take deductions on a second home or a first home that might be used as an income property and having that really restricted and really limited, that I understand that becomes a very difficult thing in states where they have that SALT deduction, and those tend to be very high tax states. So I get why there are some congressmen and some senators that want to raise the limit way up on those SALT deductions. I get it. I understand. But if they're not successful in doing that, they better get something done. So these are the types of things going on this week that could affect the direction of the market in a dramatic way, up or down. It's not going to be economic reports, and it's not going to be earnings that I think will drive things in a big way. Now, with all of that said, I want to talk about the new trade that we sent out, because I'm doing something different than I've done for a while in a couple of respects. Number one, and let me see if I can, let's try and blow this up a little bit, make it a little bit bigger on your screen. I got to change some things on my screen for that to happen. Okay, that's a little bit bigger on your screen, I believe. So here's the new trade that we're doing. It's a simple trade. It's a horizontal call calendar spread. It's just using the same strike price on both a long and a short call. The long call is way out in time. It's January. It's over 6 months away. The short call is next month. Both are out of the money. CoreWeave is trading at 85 and some change. These are both 90 strikes. The idea behind this trade, and I'm explaining this because we haven't done this type of trade for some time, a horizontal call calendar. The idea behind this trade is that you've got your long call way out here in January. Your short call is right here in June. The stock is trading down here, $4.50, $5 below. And as the stock climbs up, you want to see this option go up in value faster than this option goes up in value. And that's because the bleed off of extrinsic value here should be faster than the bleed off of extrinsic value here. So what we would like to see is between now and June, sort of a steady move to the upside without being a real sharp move to the upside. Now, that steady move to the upside is almost never going to be a perfectly, flat diagonal line. It's going to be a movement that's kind of back and forth and up and down. But overall, over that period of, what do we got, 3.5, 4 weeks until the June 20th expirations, we want to see kind of this overall upward trend, even if within that trend we're kind of all over the place like this. That's okay. The reason I did this with CoreWeave, the strategy itself, is because they have had almost an unrealistic kind of incredible run to the upside just recently. And I'll illustrate that right here. Let me get this chart on. They only initiated coverage on this company back in the first part of April, end of March. They dipped a little bit after their IPO, and then they've been almost straight up since then. They're in overbought territory, and I expect them to come back down out of overbought territory, but then begin their move back up. Here's why so here's another. So it's the first time for a little while that we have done. It's the first time for a little while that we have done a regular horizontal call calendar. So that's not a first, but it's the first in a while. I believe this is the first time I've ever instigated a trade on a company that has only been publicly traded for a few months. But here's why I'm doing it. There's a couple of people that I listen to in the mornings on CNBC, Fox Business News. There's a couple of people whose blogs I follow. There's a couple of people in the industry of being advisors, investment managers, hedge fund managers, brokers, that I tend to pay a little closer attention to, because their way of looking at things lines up closely with my own, and because I have found over years of listening to these people that they're right more often than they are wrong. And one of the first people, everyone that's been with Safe Option Strategies for any part of the last couple of years knows how big I am on Palantir and how much I like Palantir. The same individual that first got Palantir on my radar is now choosing CoreWeave as his stock of the year. So I heard that a week ago. I have been watching this company very, very closely, not just in terms of this big move up over the past, week. I've been watching this company in terms of, I've been looking at who their management is, what space they play in, what their what it is they're doing. I've been doing all of my fundamental analysis on this company, and I'm pretty big on this company as far as who their management is, what direction they're moving already, what their long-term outlook is. I think they are going to be one of the leaders in cloud AI management, modeling workloads. I'm drinking the Kool-Aid on this company. I am absolutely unequivocally, I'll admit freely, drinking the Kool-Aid on this company. But in addition to that, the spread trade that we're doing, the January 90 calls that are way out here, the June short calls that are right here, I expect a move down out of here that's going to cause this to wobble a little bit, maybe come down to about where the 5-day moving average is, around 75, which will devalue this short call dramatically. And then if that does happen over the next couple of weeks and they start to bounce and go back up, I am going to buy to close this short call and have a January long call that is just going to continue to go up in value as this thing takes off to the upside. Now, when they are ready to report their quarterly earnings, and I believe, I'm going to forget the exact date, but I did look at this and take this into effect. When they get ready to report their corporate earnings, if we still have those long calls in place, okay, August 13th, this is not a firm date as of right now, but it's out there a little ways, and they'll give us a little bit of notice on when they decide to give that first earnings report. We'll have time to prepare for it. When we get to that first earnings report, if we are not already profitable in this trade to the tune of 35 or 40%, at which point in time I may decide to get out, take that profit, and then wait for the earnings report and see what they do before getting into a new trade. But if we're not profitable to the point we want to be when they do that earnings report, then I am going to turn these January 16th or January 2026, I think that is the 16th, January 2026 long calls into a synthetic collar trade. We will add a short call that is a little higher than the 90 strike and probably place it somewhere like a September, October, maybe November. And then we'll add some very near-term short puts so that we'll have our long call, our short calls, and our long puts set up something like this. And then if we get a strong earnings report, we're still in good shape. If we get a poor earnings report and we go down, we're in a synthetic collar trade and we can make an easy adjustment on it regardless. So that's the plan with CoreWeave. I expect this to be a little bit longer term trade, and I'm excited about it. I think this is a company that I really think this may be your next Palantir. They started at a much higher price than Palantir. Here's the other thing that I like about them. Palantir right now, one of the only negatives on Palantir is that it's trading at an incredibly high multiple. Multiple meaning they're looking at forward earnings, the price per share right now, and how many times or the value per share based on the cash they have on hand. Or anyways, they're trading. I want to say, I think Palantir is something, maybe I can tell you what their multiple is real quick instead of guessing. It's something kind of ridiculous. I think the S&P average is in the mid 20s. The NASDAQ average for a multiple is in maybe the low 30s. And I want to say Palantir right now, I know they're really high. Forward PE 208. I was looking for just the percentage of where they're at in terms of it, but it's really high right now. I want to say it's something like 100, but I might be misquoting what I heard. Before today's trading, which was a very nice bullish upward move day, CRWV was trading at a 7 times multiple. Like you're talking less than half of what the S&P multiple is for S&P 500 companies, less than a third, actually less than a fourth of what the average NASDAQ company trades at as a multiple. So with that being the case, Palantir's valuation multiple, I'm trying to see if I can just get it. 36 times. There you go. Okay, this is what I was looking for. I thought it was in the 30s. I thought it was a little higher than this, but it's 36 with the average NASDAQ stock up around 30. So Palantir is definitely trading very high. CRWV, like I said before, this morning's trading was at a 7 multiplier. I'm big time bullish on this. And after their first earnings, maybe even before their first earnings, I might buy some shares and collar trade this stock. There have been a few times in the past where I've been cautious about getting into companies when they're newly traded as a publicly traded company, and I've regretted it. My wife still reminds me from time to time that we didn't buy Amazon shares back when they were under $50 a share and had never gone through a split. She's reminded me of other companies that we could have bought stock at really, really, really cheap compared to where it's trading now, especially when you factor in how many times it's split. CoreWeave may be the first time I'm going to break that mold and jump in earlier on, but do it in a very safe collar trade. So the spread trade that we just put on, super, super easy trade to adjust if this thing goes south and I'm completely wrong about it. But absolutely great trade to make money on if I'm right. Easy trade to adjust whichever direction it goes in. And then, like I said, there's a good possibility we'll add this to our collar trade portfolio very soon. As soon as we have a firm earnings date, I think that's when I would likely add it to our collar trade portfolio. All right. Rest of our spread trades looking fantastic. This was up over a little over 130% a few days ago, but we lost a little bit on Palantir today. We lost a little bit on Walmart, although I'm not worried about don't worry about the Walmart trade at all. I already sent out the Signal newsletter with the CoreWeave trade in it. I did not include an adjustment to Walmart because I thought Walmart was going to drop more than it did today. It rallied with the rest of the market and came pretty dramatically to the upside after how far it was down. Not in terms of a big, giant, huge move, but in terms of how far down it was. You can see it started the day way down. And I was going to let the long puts roll by themselves, just leave them where they are, let them go down, not add any short puts to it. And then we lost value in the short call that we rolled out last week. And of course, our long call was losing value also. But then after a very brief move to the downside, they just steadily gained all day long and finished the day only 12 cents down. So I'd like to see them drop a little farther in the next day or two before adding a new short put, or see that they're going to really maintain, a strong level of support. And then it'll be, and I think they kind of sort of gave us the first indication of that. Between what they did on Friday and what they did today, it does feel like the 20-day moving average is kind of holding as support. That would be pretty consistent with, somewhere between here and here, which, creates just visually a pretty strong support line. So if tomorrow they're not dropping below 96 a share or finishing the day closer to 96 a share, then we will probably add a short-term short put in the 96 or 97 strike price range. But even though we're down in the trade a little bit right now, I'm not worried about it in the least. And then AMD profitable, Johnson & Johnson, again, we're not trying necessarily to get back to profitability, but this is also improved because Johnson & Johnson was up a little bit today. So that's also an improved mark right there. So overall we're doing fantastic in our spread trades. Our collar trades look to be in really good shape. We've got some on the collar trade side of things. We had these puts expire worthless at the end of the day on Friday. I believe that was the only, I don't think there was anything else that we were really overly concerned about because we did a lot of adjusting last week. So I think all of our collar trades are pretty set where we want them to be for the immediate term. There's always the possibility of some adjustments if something really moves dramatically to the upside or downside. So we'll keep an eye on that. But collar trade's looking pretty good right now. So I'm going to wrap up right there. That's where we're at. I'll be on live tomorrow morning, just after, like about 30 minutes after the open of the market, right around 8 o'clock my time, which is Mountain Time Zone. 10 Eastern, 9 Central, 7 a.m. on the West Coast. And if you're not in one of those 4 time zones, you'll have to do the math yourself because forgive me, but I'm not going to. All right. Have a great rest of your Monday. Have a great day tomorrow. I'll be on live tomorrow morning, 8 a.m. Mountain Time. Thanks, everybody. Bye-bye.